Yeehaw! This is Mayor Kopczynski, the CEO of RegAlytics, with your update on this week's 51,607 regulatory alerts. I would also like to wish a very happy birthday to my bro Joe at 6 of 9. The regulator of the week is again the Texas Stock Exchange, otherwise known as TXSE, and it's about to change the face of American financial markets forever. The Texas Stock Exchange is a brand new, fully integrated national securities exchange based in Dallas, Texas. The SEC approved it last September, making it the first SEC exchange approval for an exchange that can not only trade stocks, but list new companies in decades. So why does that matter this week? Well, because this week in RegAlytics, we started seeing other exchanges filing proposed rule changes with the SEC specifically to add the Texas Stock Exchange as a recognized trading center. So the plumbing is in place and the trading is going to get started between July 2nd and July 17th of this year, which leads us to the topic of the week, which is IPOs and whether public markets still matter. Here's the backstory. In 1996, there were about 8,000 public companies in the United States, and today there's roughly 4,400 companies that are public. We've shrunk that number in half over the last 30 years, and why is that? Well, because of regulation. It is really expensive to list and manage a publicly traded company in the United States. Take Coinbase, for example. Coinbase is listed on NASDAQ. On May 7th, they had a severe outage. Multiple cooling systems failed in an AWS data center, and trading deposits and withdrawals were unavailable for about 8 hours. Why does that matter? Well, because this week, Coinbase published a detailed public postmortem. They explained exactly what happened, what failed, what exacerbated the problem, and what they're doing to fix it. And communication like that is really not a choice for Coinbase anymore. It's a requirement because they're publicly traded. And here's why that matters to normal people like you and me. If a company is not public, you can't buy stock in it through your brokerage account. You can't participate in its growth. But where did the rest of these companies go? Well, they certainly still exist. They're just privately held. And private companies, which means they're only accessible through institutional investors and the ultra wealthy. So normal people like you and me don't have access to the same variety of companies. And private markets are significantly less regulated than public ones. There's fewer disclosure requirements, less transparency, and far less visibility into how those companies are actually performing. And that's why we're not allowed to invest in them, because we're not sophisticated investors who presumably know how to really understand the strength of a given company. And that's why the SEC and other financial market regulators up the scrutiny, because ordinary people like you and me can buy stocks. So stocks need to be somewhat safe. And that's why disclosures and capital requirements and reporting is a part of being publicly traded. But as you can imagine, there's a lot of work and a lot of money that goes into it. So companies decide whether going public is worth it, and many have decided it's not. And so for those that do list, the stock market has also become increasingly concentrated. In fact, the top 10 companies in the S&P 500 now represent a historically large share of the total index. And that means the index is less of a broad economic bellwether than it used to be. So when people say, oh, the stock market's doing well, they're really just describing a handful of very large technology companies like NVIDIA and how those companies are doing, but not the broader health of the American economy that is in the private companies. So the Texas Stock Exchange is trying to change the math. Its stated mission is that it's going to reverse the long decline in the number of public companies by reducing the regulatory burden of going public, but also maintaining high standards. And they have serious backing. I mean, BlackRock, Citadel, Bank of America, Goldman Sachs, they've raised $275 million to launch. And Exxon shareholders just voted to re-domicile to Texas. New York Stock Exchange and NASDAQ have both already set up competing operations in Dallas. So this is all a very interesting topic to follow and something to keep on your radar. But that's it this week for RegAlytics. We have the global supply chain of the world's regulatory alerts in one very easy to use place. And if you need a solution for anything related to regulation, give us a call.